Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at BTC here today. Now, we did come up to the 61.8% fib just a day after rate cuts. Now, we came up to the 1.382 extension. I mentioned in the second last video I uploaded on YouTube, I did say that we could come up to the 1.382 extension on rate cuts and then see a drop down for a C wave for your wave 4, and we did just that. We came down for your C wave, and then there was also a possibility of a flush down to the 100-day moving average to test this inverted head and shoulders pattern, the neckline, and we did that. So we've come down now to this neckline. Okay, we're slightly under the 100-day moving average, just consolidating under it, holding the 61.8% fib over here. Now, it's likely that what we're forming is a wave 2 that should go no lower than $108,808. Or we could be forming a B wave like this, A, B, and a C, just to go a little bit higher. In my opinion, I don't think that it's an ABC. I mean, if this was the bottom over here, I think it's going to be a wave 2 low before we have our wave 3, 4, and 5 of 5 to the upside. Okay? Now, in the case that we lose 108,808, it's likely we're going to take out the August 29th lows at around 107,253 to come down to the 38.2% fib at around 105,000. Now, if you take a fib all the way from the low of this rally, which was April 7th, up to this high over here on July 14th, take a look at it on the linear scale, you can see that the 38.2% fib is right there at 105,291, and you may even see a little bit of a wick below it, like this, to tag 103, the 103 area. Now, that's only if we lose 108,808. This still could be a wave 2. I just want to see price hold above $108,808 and get back above these two levels right here. So the 38.2% fib at 113,748 and the 50% fib at 115,743. Now, these red fibs were derived from taking a fib right from the top of this range over here on August 13th down to this low on August 29th. Okay, see how we were rejected here at the 618? And then if you take a look here at the small time frame, like I showed you, we went no higher than the 1.382 extension. Take a look over here. See how we came right up to the 1.382 as shown over here in my previous post. So we'll see how the rest of the week plays out. We're just consolidating there at the 61.8% fib. What I would want to see over here is an impulsive move to the upside, more specifically going north of 113,748 and 115,743 in order for us to negate more downside and to consider this being a strong low for a wave 2. In the case we lose the 88.6% fib, then it's likely we're going to come down to take out the August 31st lows to around 105 to 103 for the last sweep in this correction before we move to the upside. Now, taking a look here at BTC on the RSI, taking a look at the RSI on BTC on the daily, so although we have a higher low here, we have an equal low on the daily RSI. So that's your Class C bullish divergence. It's not the strongest of divergences, but it's still there. We can even see on the 4-hour time frame that we have dipped into oversold territory. Okay, we dipped into oversold territory on the 4-hour over here. On August 2nd. We also dipped into the oversold territory on June 22nd. Then we had this run up, and now we dipped into it again, which was September 22nd. Okay, so this is the biggest liquidation event that we've had all year, and that's very significant considering all of the nasty shakeouts we've had, right? Just like going through all of those shakeouts, to think that this was the biggest one, it's, you know, very telling on where the market's going to go. We may see some chop around here, but ultimately I would be expecting higher. That's just my bias. Don't forget the triggers to the upside and to the downside. We're going to take a look here at the stock RSI. Stock RSI is turning up from the lows. And we also have a little bit of bullish divergence here. Take a look here at the 12-hour. The 12-hour is right at the bottom. Okay. Last time the 12-hour was at the bottom and we printed bullish divergence was over here, like this. Okay. And even over here. So I think there's a very big possibility of a rebound, but I want to see how the rest of the day plays out and the rest of the week. Today's Tuesday, September 23rd. I want to see how we react by the time Friday comes around, especially Wednesday, which is tomorrow. We are back on the neckline of this inverted head and shoulders. Momentum indicators are flashing that we are in oversold territory. So it's either that we're going to come up for a rebound here and then continue lower. But in order to negate that move, like I said, I would like to see a move above 113.748 and 115.743. If we can get these two things, then we're looking good, and we can consider this being a wave too low. Okay, now a lot of analysts are saying that, oh, okay, this is your A, your B, and your C wave. I doubt it. I do think that if we end up getting back above these two levels, it's likely a wave too low before we come up for a wave 3, 4, and 5. Okay, like I said in my previous BTC update, let's take a look here. I do think that we're going to come up to this trendline resistance right here. You see how we used it back in March of 2024 before we went on a 7-month long correction, and then we used it again in December of 2024 before we went on a almost 3-4 month long correction. Yeah, 4 months. And then we haven't used it yet for the third time. So coming back up here, and what we can also do is we can clone this to create a little bit of a buffer. So put this down here. That would bring us to around 133 or 134 up to 140. So I still think we're going to come up to this level. But yeah, that's what I see on BTC. I hope you guys enjoyed the video. If you guys love the content, then click the link in the description below to join the free Telegram. Please like, share, subscribe. Peace out and take it easy. See you guys in the next one.